Kalila Reynolds and welcome to Taking Stock. I'm filming live on location from my yard until the threat of COVID-19 passes. We're observing social distancing and doing interviews via Zoom, so I ask that you bear with us because everyone's trying to use the internet for everything now, so the connection might not be the best at all times, but the show must go on, so I'm still here to keep you informed and updated with the latest business news and how it will affect you and your money. So come on, let's get this money. First up, contrarian investing. What is it? And should you adopt this strategy during this crisis? We'll hear more from Senior Vice President and Head of Investment Banking at Sygnus Credit Investments, Gregory Samuels. And later, the analysts weigh in on the latest stock market developments. We take a look at TransJamaican Highway's first week as a listed company and more COVID cash. The finance minister announces more money to assist laid-off workers as well as farmers. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Recession. IMF Managing Director Kristalina Georgieva said it's clear the world has entered a recession as bad or worse than the global financial crisis in 2008. The COVID-19 pandemic has driven the global economy into a downturn, forcing the IMF to revise growth projections for 2020 and 2021. Recovery is expected next year. In fact, the IMF boss says there may be a sizable rebound if there's success in containing the virus worldwide, limiting economic damage. More than 80 countries have already requested emergency aid from the IMF. The fund is estimating the overall financial needs of emerging markets at $2.5 trillion. Now, as the COVID-19 crisis continues to cripple global growth, the Bank of Jamaica is projecting that the local economy will contract significantly if domestic and external responses to the pandemic have to be sustained for most of the next fiscal year. The central bank has also announced an 8-point preemptive monetary strategy to ensure sustained cash flows. It says it stands ready to deploy more measures, such as reducing the cash reserve requirement as well as the policy rate, which has been left unchanged at 0.5%. Meanwhile, the BOJ's measures will complement the government's response to the pandemic. Finance Minister Dr. Nigel Clark announced details of the measures as he closed the budget debate in Parliament last week. Under the $10 billion contingency care program, some persons who lost their jobs due to the impact of COVID-19 are eligible to receive $54,000 by June 30. Licensed tourism businesses are also entitled to that amount for each employee they keep. $1 billion is also dedicated to support self-employed and informally employed persons, $800 million for small businesses, $1.2 billion for small tourism operators, and $1.1 billion for PATH beneficiaries. In related news, market fallout caused TransJamaican Highway TJH to lose just under $3 billion in market value on its JSE debut on March 24. The stock lost 16%, plunging to $1.18 on its first day of trading before rebounding to close the week at $1.30. Due to the threat of COVID-19, there was no listing ceremony for the country's largest ever IPO, which raised over $14 billion and was oversubscribed by 130%. TJH is the first road company to list on the JSE and now has over 31,000 shareholders. Meanwhile, remittance inflows might also be heading down, with local remittance companies already reporting declines from the lockdowns and job losses in key markets. And Parliament has passed a resolution to curb price gouging while Jamaica remains a disaster area. In other news, Supreme Ventures Group President and CEO Ann Dawn Young Sang has resigned effective March 20. She leaves the company just 2.5 years after coming in to lead their regional expansion, which saw Supreme Ventures opening shop in Guyana. Gary Peart has been appointed executive chairman effective March 23. Peart is also CEO of Mayberry Investments, which is one of the largest shareholders in Supreme Ventures. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, moving against the herd, doing the opposite of what everyone else is doing. What are the merits of this type of investing and what are the risks? We'll discuss. This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. But before we jump into our discussion, first, let me thank our sponsor, Water. Well, things continue to look bleak on the stock markets, both in Jamaica and around the world. A lot of people are at a loss as to what to do as they watch the value of their portfolios, your portfolios, shrink. But Senior Vice President and Head of Investment Banking at Sygnus Credit Investments, Gregory Samuels, has some ideas about how you can manage your portfolio right now. One of them is called Contrarian investing. Sounds fancy, right? Well, Greg is here to tell us all about it. Hi, Greg.
Thanks for having me.
Okay, so we're talking today about contrarian investing. That's this big fancy word. Tell me what that is.
Contrarian, as the word suggests, it means oppose to popular views. So, for example, a contrarian investor is one who will take a position against popular sentiments. So, for example, based on current market conditions now, persons will see this as a sort of a bear or a start of a bearish market. So the typical investor will be more conservative and so forth. A contrarian will take the opposite bet or view where they'll be more aggressive or bullish, and they will see this opportunity as a buying opportunity or opportunity to long investment or a stock.
Okay, so basically you want to do the opposite of what everybody else is doing. That's
Correct.
Contrarian.
Correct.
So how do you know when to take this type of strategy, or is it something that you would always do?
Well, what I'll say is this: for any transaction or market to work, you have to have parties on either side of the trade, right? So for somebody to be contrarian, it means that somebody would have to be at the opposite end with a different view. So irrespective of whether it's a bull or a bear, you'll always have persons on the opposite side, whether it's traders or you have brokers and so on. Persons like to quote a Warren Buffett, where his philosophy is this: in every crisis, there's an opportunity, and I'm paraphrasing here. So right now, a lot of persons are the typical persons.
Be greedy when others are fearful, and fearful when others are greedy. That's the popular quote from Buffett.
Correct. So you could say he's a typical contrarian, because right now you expect Warren Buffett to be looking in the market for opportunities and buying, while you expect others are either selling or moving to what we call safe haven investment, like treasury bonds or gold or stay in cash. Warren now looking for assets that he figure are good companies but are deeply pressed. So they're looking to buy up some technological stock now, like your Apples or your Facebook and so on and so forth. While the typical conservative person will be looking to go into some treasuries, buy some gold stocks or some soft commodities or some structured notes that are principally protected.
How risky is this strategy though, Greg?
So it depends on the investor, because different investors have different I'd say risk tolerance. So for example, if you are a contrarian with a high risk tolerance, you'll employ strategies such as all-out shorting of the market, or going to some exotic products like structured notes, where only say 60% of your principal is protected. A more conservative persons who want to employ this strategy, they'll probably go for 100% protected principal notes, for example, where the underlying assets is betting against the market, or rather than outrightly shorting the market, they'll buy a hedge. For example, if they expect that the market is going to go down, that's their contrarian view, they basically buy some put options where once the market continues to go down, then the put option will basically pay off for them. So it depends on how risky you are. That will dictate what strategy the portfolio manager would employ, you know.
Okay, so there are a couple of terms that you use there that perhaps everybody wouldn't understand. One of them, that the first one you mentioned, was short selling, and I hear people talking about that a lot in these times. Explain what that means, shorting the market, and how do you do it?
Okay, so in a nutshell, shorting the market is basically borrowing a security that you don't own. So you go to a broker, for example, and say, okay, lend me 100 units of Apple stock, and then you will sell the stock. So you borrow the stock to sell it. And the reason why persons employ a short selling strategy is because they expect the market to go down. And then at some point in time, T could be a week later, a month later, when the stock falls, they will buy back the stock at a lower value and return it to the broker. And so the difference in price, that's your profit that you make on the trade. So in other words, short selling is basically selling stock that you don't own. If you own the stock and sell it, then that wouldn't be a short, that would be an outright sale.
Mm-hmm. Do brokers here in Jamaica facilitate this strategy, facilitate short selling?
Well, so first of all, our stock exchange doesn't allow short selling because, as you can imagine, if the market that you're shorting is not deep enough, then companies could go bankrupt, for want of a better word. Because let's say, take for example, an airline company. You know, as you know, airlines are basically shut down now. So if you own an airline stock and everybody will be bearish, everybody will start to sell. So everybody sell, theoretically that could go to zero. But in the larger markets, because it's so deep, you will have, to borrow your term, you'll have contrarian who don't expect this to go all the way down. So people would be on the opposite side of the trade. And so theoretically, you don't expect the stock to go to zero. On the JCSC, because we don't have that depth of the market could crash. So, you know, for markets like the JCSC that are not very deep, short selling is not allowed. But for brokers who offer their clients exposure to global markets, so for example, the NYC or the Toronto Exchange or the London Exchange, they can go to their broker and apply those type of strategies. Mm-hmm. So there are brokers in Jamaica who offer US stock options, and short selling is one such strategy you can use. Let me hasten to say though that margin accounts and short selling is what we call a speculative approach, because you're betting. So you're borrowing money to bet against something happening. And if the market move against you, your losses could be amplified because you have something called margin call, where if the value of the stock moves against you by, let's say 20%, then you have to post margin, meaning you have to take cash and basically post that to bring back the margin to the required level. So that's the riskiness about short selling. You can get burned if your strategy doesn't work and it goes the opposite. Because let's say, for example, you want to short an Apple stock. So you go to the broker, Apple stock now is trading at, say, $200. You short it at $200 and you anticipate in 2 weeks' time, Apple will fall to 180. So you'll buy it back at 180, give it back to the broker, and you make a $20 profit. Now, if Apple stock should move to 250 now, you realize that you're in trouble. So not only you have to find an extra $50 to buy the stock to return it, but because the margin, the maintenance margin price might be 220. The moment that hit 220, you have to basically find an extra $20 to post, and then in 2 weeks' time, when you buy back the stock at 250, your total loss on the trade will be $70. So that's a strategy you have to be careful of, yeah.
Okay, so coming back to the contrarian strategy, though, Greg, I'm listening to all that you're saying, and following the market, saying, okay, this might be a good time to try to want to do the opposite of what the herd is doing, the opposite of the herd mentality. But how do you know when it's a good time? And this is the tricky part to getting it right. How do you know when it's the right time to adopt the strategy, to jump in and say, okay, I'm going to buy now because prices are low? Because if you do that, then what if the prices get even lower?
So that is why you have investment advisors who get big bucks to help their client through times like these. So as I said to some of my colleagues and clients, now is when you differentiate between a good advisor, because when markets are good, all advisors look good, but in times like these, this is where you earn your fee.
All right, so tell me, what types of stocks would you be looking at right now with this type of strategy, or can you use it for anything?
The conventional wisdom dictates that in a bear market, persons should move to what we call safe haven assets. So you should basically be out of the stock market now. And when I say out of the stock market, meaning rather than remain in stocks, you should be in treasuries, gold, investment grade bonds. If you want to have exposure to stocks, it should be what we call defensive stocks. So stocks that basically link to underlying like gold, soft commodities, or for example, stocks where the companies, for example, make foodstuff, because you know that during a recession, people still have to eat.
Manufacturing and distribution companies ought to do well.
Right. As opposed to an airline company or a cruise company, you don't expect those to do an energy company, because this is right. The tech stock is the view that Corona is basically going to change how people operate going forward. So stocks like Zoom, Google Hangouts, where persons no longer have to have face-to-face meeting, but virtual meetings. So these are the tech stock that you expect will emerge after the crisis as good companies. Amazon, where deliver stuff to your house as opposed to going to the place themselves. So the expectation is that these are, if you're a contrarian that doesn't have a huge appetite for risk, then the tech stocks are good stocks to buy at this time based on...
But isn't it late to try to jump in on those now, because that's what everybody is thinking? That's the herd mentality, to go for the tech stocks, to go for the Amazons, to go for the Zoom.
Well,
and now those prices are going up.
Well, not necessarily. So this is the thing about...
You might have wanted to jump in on those at the very beginning of this Corona crisis. By now it's kind of late, isn't it?
This is the thing about stock market. You'll never know for sure whether the bottom is reached or the top is reached. Right? So that's the first thing. The second thing I will say is that we're at the tip of the Corona thing. There's still some way to go. So the market going forward is going to be a roller coaster ride. When there's good news, market is going to rally. Bad news, it's going to tank. So the idea is that in times like these, you have to set up your portfolio such that you're protected against adverse movement, as well as you have a huge upside to benefit from the movement that you are bullish on. So what I'll tell investors who are conservative or risk averse is that don't look at the market every day. Build a nice, balanced, diversified portfolio. Leave it and look at it at huge interval or large intervals every month or every 2 months. Because if you look at it every day and it drop, your heart going drop and you can't sleep for that night. Yeah. Because at the end of the day, the stock market is the best asset class you can invest in over the long term. 5, 10 years, 20 years, the market will outperform any other asset classes. And now is a good time to buy because all the assets are basically depressed. And the thing is not to watch whether you get it 10% a little more expensive than last week, because a month or 2 later, or 3 months, 6 months, you're gonna be up, or you should be up.
Thanks, Gregory.
Thank you.
Well, when we come back, I've got your market recap and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange continued its decline last week, with the combined index falling 2%. 96 stocks traded across both the main and junior markets of the JSE for the week ending Friday, March 27, 2020. 39 advanced, while 54 declined and 3 traded firm. 549 million shares changed hands on the Jamaican dollar market, totaling nearly $2 billion. Pulse Investments traded the most, taking up nearly 45% of market volume. The stock closed last week at $2.26. Trans-Jamaican Highway made its debut on the main market as one of the most traded stocks for the week, with 190 million shares changing hands. The stock closed the week below its IPO price, falling 8% to $1.30. And Wigton Wind Farm rounds out the volume leaders, with people buying and selling nearly 51 million shares in the company. Wigton gained 9 cents to close at 63 cents. Turning to the top advancers now, Iron Rock Insurance saw the biggest gain. Its share price jumped an astounding 50% to start this week at $3.45. 138 Student Living Jamaica rebounded last week, climbing back up 34% to close at $5.41. And Lasco Distributors gained 26%. Lasco ended the week at $3. On the losing side now, Caribbean producers Jamaica took the biggest tumble, falling nearly 26% to close the week at $2.40. Elite Diagnostic also took a big hit, down 23% to end last week at $2.71. And Kingston Live Entertainment KLE Group fell nearly 22%, down to $1.25. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth and NCB Capital Markets. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. We're joined by research and strategy analyst at Sagicor Investments, Jodian Aris, junior research analyst at NCB Capital Markets, Jamelia Jalaalwalikraam, and co-founder of Caribbean Value Investor and host of Beyond the Stock Price on YouTube, Devrhoid Davis.
It's good to have you all on, where many of us are working from home in this difficult time. Glad to have you, Jamelia, Jodian. Devrhoid is back looking sharp. I don't know how you managed to get a haircut in this crisis, but you did it. Let's start with the big ticket item for the week, which is TransJamaican Highway, that listed on Tuesday. Jamelia, let's hear from you. What are your thoughts on where it is? Because it ended the week on Friday down actually at $1.30.
Yeah, so we saw we're on the first day of trading. It fell to as far as $1.18, and TransJamaica really just saw the same fate that other stocks locally and globally have been seeing, where people are reacting out of fear of uncertainty around COVID and the economic impact that it will have overall. And so persons were selling because they're trying to liquidate, I guess, for whatever reason. They want funds to get to whatever needs they have or whatever their reasons are. But on day 2, we saw where there was more stability around Trans-Jamaica's trading, where you saw more buyers coming into the market.
Let's go to Jodian. What's your take on it?
Persons are seeking liquidity, similar to what Jamelia had alluded to earlier. And there's general fear around COVID. I mean, we see where the market is coming down, and persons probably are thinking, maybe I can get as much as I can now because it could dip further. And that could have been a part of the reason why a lot of investors we saw that in first day of trading where persons were saying, let me get as much as I could in terms of liquidity from TransJamaican Highway, the IPO. And they probably would have anticipated to have expected that because of trend over time, IPOs thus far we have been seeing where day 1 of trading there's a jump up. And with this uncertainty surrounding COVID, persons are thinking maybe if it starts to dip, I don't want it to go all the way low. Let me see how as much as I can get in terms of value. And so they probably would have opted to sell.
Now, Devrhoid, I see where the NCB, Devrhoid, has put out a position paper saying that they still think that Trans-Jamaican Highway is fairly valued and could be valued even higher than what the market is saying or what the IPO price was. Did you look at that assessment and what do you make of it?
So I did. I saw the assessment put out by NCB, and I'm actually in agreement with both the fair value estimates that the 3 different valuation methods that they attempted to use came out at. In one case, I believe the value was around $1.71, and at the highest, I believe it was at $1.73 or $1.74 per share. When we originally, and this is myself and the other analysts at Caribbean Value Investor, when we did our analysis and our coverage of the prospectus, we actually put a fair value estimate on Trans-Jamaica closer to $2. And this was also taking into consideration the projections for growth that the company could experience from all of the developments that are still slated to happen around the stock. Our time horizon was over a 6-month period. So we had anticipated a 30% increase over the IPO price within 6 months. We still stand by that assessment. And in fact, we support the position taken by NCB in their fair value estimates that they've actually released. Being as the stock is at around $1, closing at around $1.30, it means that the stock is currently at a significant discount to what our fair value estimate is. And so we think that's a good thing.
But how do you, I'm coming to you right now, Jamelia. And let me ask this question to you then, Jamelia, since you're on and you are from NCB, you are one of their analysts. The issue is that because of COVID-19, a lot fewer people are going to be traveling and are indeed already traveling. Schools are closed, so you don't have that traffic on the highway. Lots of people are working from home, so you don't have that traffic on the highway. And therefore, revenues will be affected. So how does that not affect the valuation?
So it's not that we didn't say it didn't. So what we did was to assess what impact we think COVID would have on the stock. So to assess that impact, we assume that, say, over the next 6 months, its revenues, Trans-Jamaica's revenues will fall by 50% each month for 6 months.
Mm-hmm.
That impact resulted in a 3-cent decline in our original value of Trans-Jamaica. So it was $1.71 that our original estimate of Trans-Jamaica was when we did our analysis during the IPO. And with this 50% reduction in revenues over 6 months, it reduced by 3 cents to $1.67. So that would result in shareholders losing 3 cents of the value of their Trans-Jamaican shares. However, since you would have done that analysis, other factors have changed. So they would have also issued debt on the international market. And initially, we had assumed that they would have to pay an interest rate of 6.5% on whatever debt they issued. However, because of the stability of their cash flows, the fact that they operate a strategically placed asset, the fact that they have been resilient, they were able to maintain strong financials during the economic crisis, and all these factors allow them to be rated higher than Jamaica by Fitch, and that is usually unprecedented since a sovereign is usually seen as more safe, or safer rather. So those factors allow them to raise debt at 5.75%. That was 75 basis points below the original. So considering that in the valuation, it resulted in a 7-cent increase on original share value of Trans-Jamaica. So it moved from $1.71 to $1.78 when you take into account that reduction in the cost of debt. That means that they have more to pay out to their shareholders because they're paying less to debt holders.
Okay, so basically the benefits from that compensate for the losses in revenue from the highway because of COVID-19.
Yes, so our conclusion was that in addition to the interest benefits, there was also a repayment schedule change. So we saw where, based on our first analysis or our estimates, we had their debt payments being higher in the front end of the maturity of the bond. So it's 2036 that the bond matures. However, when the bond was issued, they released their repayment schedule, which showed that the higher payments will come to the end, to the latter end of the bond's maturity. So that also benefits shareholders because you won't see Trans-Jamaica having to pay out higher amounts to debt holders until the far end of the maturity. So overall, when you look at the impact, the reduction from COVID in its impact on revenues, plus the benefits from lower interest, better repayment schedule, it more than offset the reduction that COVID would cause. And it resulted in actually an increase in the fair value estimate of Trans-Jamaica by 3 cents. So now our estimate of what Trans-Jamaica is worth is $1.74, up from the $1.71 that we originally estimated. So that shows that there's still value in the company.
Jodian, let's come to some of the measures announced by the government in the past week. You've heard announcements from the finance minister, you've heard announcements from the prime minister as well, as to things being done to assist businesses in this difficult time. What impact do you think that will have on A, the market, and B, possible companies that are listed that may be affected by this crisis?
Okay, well, based on what the minister said, he did point out that we had to do the trade-off. So in terms of protecting individuals, we chose to have tighter restrictions in terms of movements, which would naturally lead to significant impact on the economic outcome. And what it is that the measures we're doing is really trying to mitigate against that sort of outcome. So we know that labor market indicators have been doing well. So we have had unemployment coming down, and now that is at threat. And as such, he would have implemented systems to encourage employers to keep persons retained. And so you see where if it is that you're working, particularly in the tourism sector, and you retain your employees, then there's a benefit to you, as well as for persons who would have lost jobs, meaning that they would also get some sort of cash benefit. What would this mean for the market is that demand would not be as bad as it could be without such a cash transfer. So persons will still have some amount of cash to buy and purchase food and goods that for companies that are listed on the market. There are not that many tourism companies per se, and I think we're projecting that those companies will be the ones that are most heavily hit from our closing of our borders. And the government will be working. We see where companies like CPJ, the companies that produce and are suppliers to hoteliers, are going to be significantly impacted because they would have done their production schedules and all of that, assuming that they would have had hotels up and running. And so I think those will be the ones that are heavily impacted at most, because what it is that they do with all of those goods that they would have imported, are they going to now sell at a discount? Is there, for example, companies that do heavy in terms of agriculture, what are they going to do with that excess that they would have supplied to hoteliers? So it's really companies that are distributors to hotels that would get some of the heavy impact when you look at companies that are listed on the market.
Devrhoid, what's your biggest fear in a time like this?
That's an interesting question, Kalila. For me, I've actually been focusing more on the opportunities. I don't want to neglect the question in terms of what I fear. It would really be a situation where we have a complete lockdown of the country and how that would impact the confidence in the markets as a whole. That would really be my biggest fear. Amidst the fears, though, I do see quite a few opportunities within the market. I'll just name a few.
Sure.
For example, we can look at companies like Grace Kennedy, for example, or even now Sygnus, where we're seeing this significant surge in just the amount of purchasing that persons are doing now in preparation for that worst case scenario. So even though we might have a situation where you may have a countrywide lockdown, we can expect with some degree of certainty that you would see improvements in the amount of revenues that is being generated by companies like a Sygnus, like a Grace Kennedy. And this coupled with the fact that we're seeing the market price of these companies coming down significantly, Sygnus being down over 40% since the beginning of the year, shows to us that there are still opportunities within the market for the investor with a significantly longer time horizon. Are there threats to the markets? Are there possibilities for companies to actually continue to trend downwards? Most certainly. And so there are valid reasons, I would think, for the enterprising investor to be cautious as to whether or not they choose to enter the market at this time. My biggest fear, though, is that we might have a situation wherein there's a countrywide lockdown, and however long that may be protracted for, you could see a significant impact on the confidence in the market as a whole.
Yeah, like what we're seeing in some parts of Europe right now, Italy, France, the UK, everybody's ordered to stay indoors. And we haven't reached that point yet, and hopefully we never do. Jamelia, what opportunities are you eyeing right now?
Well, a lot of the blue chip stocks, especially financial institutions, we've seen where their stock prices would have fallen. And so those that are, you know, they have good, strong fundamentals. You have NCB, you have JMB, you have a Sagicor. Companies like that are ones that I would be eyeing at the moment. It'd be good to get in while the prices are low so that you can ride the wave as the prices increase and, you know, increase your opportunities to get high returns.
Jodian, what strategies are you looking at in this time? Because a question that I keep coming across is, how do I know when is the right time to jump in? Because we probably haven't seen the bottom of the market yet. And so people are wondering, do I buy now or do I wait till later? How do we know when to jump in? And what would you suggest as a strategy?
Well, I mean, ideally, you'd want to go in at the bottom, but it's very hard to predict when that will be. And as such, we think probably a phased-in method is probably the best way to go. So if it is that there's a stock that you liked and you've always liked and know it's at a lower price, you buy a little bit at this price and then you watch if it dips a little further, you get a little bit more at the lower price. So not to necessarily go in all in at a price that you like, but to just buy a portion at that price and then phase your way in to see if there is further in terms of the price dipping further. I think that's probably the best way to work because we can't ideally predict when the bottom of the market will be. I mean, I've read studies or articles that are indicating that possibly the bottom is where the peak in terms of new cases are in the US. So they're saying that the stock market there will dip at the lowest point when the peak of new cases of corona incidences are at its high. I mean, I don't know if you'd want to work with something like that to consider when we'd have a bottom out in our market, but definitely a phasing approach is one of the good things to look at. And also to, as Jamelia pointed out, to look at companies with the strong fundamentals. There may be companies that you may think have increased revenues now that we're in COVID, but you'd have to also remember that a company that was not necessarily efficient before a crisis may not necessarily be gain efficiency now in a crisis, and you really want to look at the bottom line. So stick with the fundamentals and probably use a phasing approach is the strategies that I would recommend.
Devrhoid, I see you have strategies there at Caribbean Value Investor as well on your website. What strategy are you using now?
And they're very similar to what Jodian alluded to. We term ours a one-third strategy, wherein we're still assessing the fundamentals. Again, we're not trying to necessarily catch the bottom of a market. What we attempt to do at Caribbean Value Investor is to assess what is a fair value estimate of what the companies are, and then try to acquire the stocks at a significant discount to that. I mentioned earlier one particular stock that was down 40+%, and it is those type of companies that we're looking into. Our approach to engaging in the market is actually going on a one-third type of, we deploy what we call a one-third strategy. So as Jodian said, we assess the fundamentals, and then what we do is we earmark a certain amount of capital to deploy in those companies. Our initial investment would be about a third of whatever that capital set aside is, and then we would reassess as the price tends to trend down, deploy another one-third, and we try to keep another third of that as liquid as possible, provided there is again a significant fall off in the price.
All right, thank you so much for your perspectives, ladies, gentlemen. I always like when there are more ladies on the show than men.
I don't mind either.
I'm sure you don't, Devrhoid.
Let's take our final break. Taking Stock, the Analysts was brought to you by Proven Wealth and NCB Capital Markets. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to the channel, and share with a friend. Also check out my other features, Money Mondays JA, Money Moves JA is also back with special episodes, and of course, What's in It for Me. And follow me on Instagram and Twitter at Khalila Ray. If you want to connect with the Analysts this week, check the description box below for their contact information. Tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Khalila Reynolds. Stay safe.